Money has always evolved alongside civilization. From the first clay tablets in Mesopotamia to gold coins, paper notes, and finally the digital numbers in our bank accounts, every transformation reflected a shift in power, technology, or society. But today, money is entering its most dramatic transformation yet, a shift from physical currency to something fully digital, programmable, and deeply intertwined with advanced technology. This is the future of money, and it may reshape not only economies, but the very structure of everyday life. To understand where we're going, let's begin with where we stand now. Over the last 20 years, physical cash has rapidly faded. Contactless payments, online banking, Apple Pay, Google Pay, these systems have made money effectively invisible. For many people, especially younger generations, paying with notes and coins is already rare. In some countries, cash use has dropped to under 5%. And this is not a coincidence. Governments and financial institutions are preparing for a world where physical money becomes optional or even obsolete. At the heart of this shift is the rise of digital currencies, especially Central Bank Digital Currencies, or CBDCs. These are digital versions of national currencies like the pound, the euro, or the dollar. But unlike cryptocurrencies, CBDCs are controlled by central banks. Think of them as cash, but in purely digital form. Governments around the world are researching, testing, or even launching CBDCs. China has already rolled out the digital yuan to millions of users. The European Union is developing the digital euro. The UK has explored the idea of a digital pound, and more than 130 countries are now investigating similar systems. But why are governments so interested in this new form of money? The pros are significant. CBDCs promise instant payments, even across borders. They reduce fraud, eliminate counterfeit currency, and make tax collection more accurate. In emergencies, governments could send financial aid directly to citizens in seconds, bypassing slow banking systems. And CBDCs could open up the financial world to millions of people who don't have access to traditional banks. However, the cons are just as powerful and far more controversial. Unlike cash, which is anonymous and untraceable, CBDCs create a digital record of every transaction. This means governments could, in theory, see what you buy, where you spend, and how your money moves at all times. Some versions of CBDCs could even become programmable, allowing limits on what you can spend money on or where it can be used. In extreme cases, digital currency could have an expiry date to encourage spending, or be frozen at the push of a button. These possibilities raise concerns about surveillance, financial censorship, and the loss of personal privacy. Governments know these concerns are real, and they're taking steps, at least publicly, to address them. Many countries are discussing privacy protections, limits on data collection, and laws preventing programmable restrictions. In the UK and EU, committees and research groups have emphasized that digital currencies must preserve cash-like privacy. Some nations propose hybrid systems where the central bank issues the currency, but private banks handle user accounts to prevent government overreach. Whether these protections will hold in the long run is another question entirely. Meanwhile, digital money isn't only being shaped by governments. Decentralized cryptocurrencies have introduced an entirely different vision, a world where money is not controlled by banks or politicians, but by mathematics and distributed networks. Bitcoin acts as digital gold, while blockchains like Ethereum enable smart contracts that execute themselves automatically. Cryptocurrencies offer powerful advantages: openness, global access, faster cross-border payments, and the ability to send money without relying on any institution. But crypto also comes with its own downsides: volatility, security risks, scams, and regulatory uncertainty. Governments are now working on frameworks to regulate crypto markets, identify users, prevent illegal activity, and protect consumers. In the future, we might see a world where both CBDCs and decentralized currencies coexist, one controlled, one open, each appealing to different parts of society. As we move deeper into the future, the nature of money will continue to evolve. Artificial intelligence is already taking over financial decisions, from investment algorithms to automated transactions. Soon, AI agents may handle payments on behalf of humans, and entire machine-to-machine economies may emerge. Your car could pay for its own charging. Home appliances could buy electricity at optimal times, and digital wallets might become intelligent assistants that manage finances without you needing to think about it. As automation and AI grow, another question arises: what happens to human labor? If machines take over large portions of the workforce, societies may need to rethink how people earn a living. This is where the idea of universal basic income becomes important. A system where governments distribute a guaranteed amount of digital currency to all citizens. Whether funded by taxes, automation profits, or entirely new economic structures, UBI could redefine the role of money in society. But it also challenges the traditional idea that money must always be earned. In the future, wealth could be increasingly tied to access, reputation, skills, or digital presence, rather than hours worked. And then, there are the more speculative futures. If humanity becomes a multi-planet species, Earth's currencies won't be practical on Mars. New planetary economies could emerge: Mars credits, lunar tokens, or interplanetary barter systems based on energy, resources, or data. Some futurists imagine currencies backed by electricity or computation rather than gold or government decree. Others imagine reputation-based economies where trust, achievements, and digital identity hold monetary value. And if advanced artificial intelligence continues to evolve, we might one day live in a world where money as we know it becomes invisible or even unnecessary, replaced by systems that allocate resources automatically. As we step deeper into this new digital era, one thing is clear: money is no longer just something we hold. It's becoming something that moves, adapts, and evolves around us. The future of money won't be defined by a single technology or idea, but by the balance we strike between innovation and human freedom. Whether it leads to greater opportunity or greater control is a story still being written, and one we will continue exploring here on History of the Future. If you enjoyed this video, make sure to like, subscribe, and join us next time as we dive deeper into the world shaping tomorrow.